Thinking about buying a home, but worried your credit might be holding you back? In today's episode, we reveal the insider tips lenders use to help strengthen their credit score and get lower interest rates. Tune in to find out how to fast track your path to home ownership. Don't forget to like and subscribe for continued mortgage and real estate tips. Hey, Lindsay, how you doing?
I'm good. How are you doing, Joe?
Good. That was quite an intro.
Yeah?
Yeah, I'm excited. I like this topic because, this is the base of one of the most important things in determining A, if you qualify, and B, some other things we're going to talk about.
Yeah. I think this topic also holds people back out of just fear of not knowing.
Right.
So I think uncovering all those questions will help people decide if they can move forward or not.
Cool. Good.
Yeah.
So what kind of questions do you have?
So the first one is, why is your credit score an important factor when purchasing a home?
All right. So like I said, two things. Really, it's A, do you qualify, right? Credit score is a qualifying factor, and it's important, it's an important piece. And it's not just the credit, it's what's driving the credit. If you have a terrible credit score, when I say terrible, terrible, right?
Yeah.
If you have a challenged credit score versus, high credit score,
Yeah.
The challenged credit score means there's something else behind it that could prevent you from getting a mortgage. But it might not, right?
Yeah.
And the other piece of the credit score that's really important is it helps determine, it's one of the main factors involved in your pricing.
Right.
So the higher the credit score, the better your pricing is going to be for the most part. The lower the credit score, you're not going to have as good pricing. Now, why? Is because lower credit scores typically mean you might not pay your bills on time.
Sure. There's more risk for the lender, right?
There's more risk for the lender.
Yeah.
So the higher the risk, the higher the cost, typically. So, yeah, those are the...
Is there a minimum credit score that you would need to qualify for a mortgage?
That's, again, a loaded question.
Yeah.
Because there's some typically if you're doing like a conventional Fannie Mae or Freddie Mac loan, it's typically 620, right? And there's some other lenders that say they'll do it below 620, not for conventional conforming conventional loans typically. But if it's like an FHA loan, you can go lower.
Yeah.
VA loan, you could go lower in that credit score. But I'd say above 620, you have a much better shot than below 620. And the better your credit score is, the better opportunity you're going to have to get qualified. It doesn't mean a lower credit score, you won't get qualified.
Right.
So it's really for qualifications and for pricing out your mortgage.
Is the cost a little bit more?
On a lower credit score typically has a higher cost.
Gotcha.
So again, it's really important factor when you're purchasing to A, for qualifications, and B, for pricing.
Gotcha. So what are some ways that you could improve your credit?
So there's a lot of things you can do. Number one, pay your bills on time. I mean, I know, but some people have the ability to pay their bills on time.
Yeah.
But it slips their mind, right? Or they forget, I forgot to make my payment. So, set up automatic pay as much as you can, put it on your calendar, whatever you have to do, but make sure you make your payments on time. Lower credit utilization. So if you have a credit card and let's say you have a $1,000 limit on that credit card, if you're at 30%, you're at $300 against your limit, right?
Right.
So you're at 30% utilization. So you don't want to like if your cards are all maxed out, your credit is going to be way worse than if they're not.
Yeah.
Because lenders are looking at that saying, look, their credit's maxed out, so they're desperate for get more credit. That means there's a less likelihood they're going to pay me if everything is maxed out.
Right.
So lower credit utilization. So keep your credit limit, limit to or usage to limit to about 30%. Another one would be, don't close older accounts. This is a mistake that people make all the time. I'm not using this account. I'm going to close it out. Well, now you just closed out. If you've had that account for 10 years,
Yeah.
and you had good payments and good standing, you just closed out 10 years of payments and good standing on an active account.
That's a lot of good history.
It's a lot of, you just closed out good history.
Yeah.
Even if it's bad history, it's still history. And closing out old accounts doesn't necessarily hurt, but it definitely might not help you.
Gotcha.
So that's an old adage that I wouldn't close out unused accounts. Check reports for errors. If you have errors in your credit report, make sure you dispute those properly. Now, I'm not going to get into credit repair on this conversation here, but if you have errors on your credit report, look for them. Are they reporting an error? Did they have a missed payment when I never missed a payment? Can I prove that? And I can go right to the creditor and get them to update and fix it, right? Limit new credit inquiries, all right? So if you're going for a mortgage, you want us to take a look at your credit. But you want to be careful about having other people pull it. Now, there is some rules, like you have two weeks to pull for credit if you're shopping for a mortgage. But don't be shopping for credit cards, cars, and mortgages all at the same time and pull it for all different reasons. That's going to hurt your credit.
Right.
They're looking at, the credit bureaus are looking at that. That's like a alert that, oh my gosh, they're just trying to get credit any which way they can. They're desperate.
Yeah.
That's going to hurt your credit.
Red flags.
Yes, yes. Spread out balances. Instead of maxing out a single card, maybe spread it on a couple cards.
Yeah.
That way you can get under, like, you don't want to be at 100% maxed out on your cards. It's just not good for your credit.
Yeah.
So maybe spread that out amongst a couple cards if you have them. And be patient and consistent. I can't tell you how important this is. A lot of these things don't happen overnight. There are ways you can be very, very wary and careful with credit repair because it just takes time.
Yeah.
If someone says, I'm going to fix your credit overnight, give me all this money, it might be a scam. It might be. Might not be, but it might be.
Yeah.
So just
Usually
be careful with that.
That's a too good to be true type of scenario, right?
Right.
Good things don't typically happen immediately.
No, I mean, typically not unless you won the lottery. Other than that, I
True.
mean, the things take time.
So how do things like credit card debt and student loans affect a mortgage approval?
Oh, that's a great question. I get this question all the time. I have student loans. Can I get a mortgage?
Yeah.
I don't know. Maybe. It's not, having student loans or credit cards does not preclude you from getting a mortgage.
Okay.
It has to do with your debt to income, basically. So if you have manageable debt, that's not necessarily a problem for a mortgage.
Right.
So you have to, if you have this much debt and this much income, that ratio is going to help determine. So just by having student loan debt or just by having credit card debt, that doesn't necessarily mean you can't get a mortgage.
Right.
So a good loan officer is going to look at all your debt. They're going to look at your monthly debt obligations versus your income and say, oh, you qualify or you don't.
So if I'm unsure about my credit, is there a place that I can go and check it potentially for free?
There is a, oh man, I can't remember.
Is it the annual credit report?
We're going to put the link down below.
Yeah.
Okay, let's put it down below. But I'm going to put that link down below
We'll link
in the
it.
description. And so there is a free place to get it from the government. That's where you want it from. You don't want it, the other ones are all just marketing tools.
Yeah.
Okay, so you're going to get a ton of advertising.
Okay. So what should I do if I'm not sure if my credit is good enough to purchase a home?
Well, again, talk to a licensed mortgage loan originator, one that you've been referred to, a friends or family, or one of the ones right here at Morgan Financial. But you want to get good advice from a licensed professional.
Right.
Because it's not just that I have this credit score. And by the way, I will warn you that a lot of those credit reports, like if you do it, they don't necessarily give you a full picture. They'll pull it from one place. And it's not necessarily the whole picture.
Right.
So I would talk to a licensed mortgage loan originator, have them pull your credit, take a look at it, and give you the advice that you need to do what you need to do to get on track. But make sure you work with someone who knows what they're doing. Now, they won't necessarily do credit repair, but they should give you good advice.
Yeah, as long as they're pointing you in the right direction.
Correct. Yeah.
Awesome. Well, that's all I had for you today. Great tips, though.
Great. Well, thanks for watching today. As we said, we're going to put some information down below. If you're not a subscriber and you want this information on a regular basis, subscribe. If you haven't liked this already, you've been here this long, please do me the favor, hit that like button. Thanks again. We'll see you next time.